Good afternoon, morning for some of you. Thank you for joining us today for Analytics for Expenses, the second webcast in our series on identifying financial statement fraud with analytics. Our speaker today, Jeremy Clompton, Senior Managing Consultant at BKD's Forensic and Valuation Services Division, will show us data analytics techniques for identifying improper activity in the expenses. Jeremy specializes in data analytics with applications in forensic investigations, fraud prevention and detection, and internal control assessments. This webcast will be recorded and will be sent to you within the week, along with the slides that Jeremy is presenting. If you have any questions, please type them in the question box, which should be on the right side of your screen, and we will answer them at the end of today's broadcast. I'm going to go ahead and turn it over to Jeremy. Thank you so much.
All right, thank you, Lindsay. I really appreciate it. Hello, everyone, and thanks for joining us for the second webcast in our series. As Lindsay mentioned, today we're going to be focusing on expenses. Previously, we focused on accruals, and you'll notice that some things will probably they really apply to both accruals and expenses, so I'm going to try not to hit too many of those again, other than those that I think we really do need to touch on. Similar to what we did last time, we have a few different topics that we're going to be hitting. We're going to be talking about some of the risks related to missing expense items, spreading or splitting expenses. We're going to be looking at vendors and unexpected accounts, and for those of you that have Foreign Corrupt Practices Act compliance responsibilities, this is something that can be very important to you, and we'll also hit on timing discrepancies. Much like a couple weeks ago when we talked about accruals, what we're going to do is we're going to talk about each of the topics, why someone might use one of these techniques for financial statement fraud related to expenses, talk about some of the detection methods, and then also get into a live demonstration in IDEA. At the end of the webinar, we will take questions. We'll go about 15 minutes of content, 5 minutes of questions. If you have questions throughout, feel free to go ahead and type those in, and I'll try to answer those as they come in. If they relate to the exact thing that I'm talking about, I'd be happy to try to do that. So let's go ahead and get started. The first thing that we're going to talk about here are missing expenses. And as you recall from when we talked about accruals, if you were there, missing or omitting expenses and accruals is something that is commonly used to manipulate the financial statements. And obviously, if you have lower expenses, you're going to have a better bottom line, and it's typically related to performance. Some of the ways that we want to look for expenses that are missing, probably the most obvious one that I would mention is looking for a month that doesn't have an expense where you would have expected it. And we're going to talk about this, that specific technique, just a little bit later when we talk about timing. But that's something that I would encourage you to do, is if you have an expense, say a rent expense or a lease expense, where you know it's going to be hitting every single month, looking for months where it's a zero and you don't have any activity at all, something you definitely want to do. Another is a pattern-based analysis. And what I'm referring to here are there are certain types of transactions that might hit the general ledger where you would expect that you're always going to have an expense account associated with that. What we're going to talk about here from a demonstration standpoint is as it relates specifically here to sales orders. So what I have is I have a sales order extract essentially from a larger GL detail file. You can see it's about 189,000 transactions. And what we're going to do is we're going to look for any of our transactions where an inventory account has been hit, but cost of goods sold is not. This is one indication of a potential scheme around expenses. In fact, there have been some media stories around fictitious vendors that I've seen where an individual tried to go ahead and relieve inventory and they hit cost of goods sold, but half of that entry actually didn't get hit. And what it did is it essentially allowed a fictitious vendor scheme to go on for quite a while, until that reconciliation was done at a broader level and they were able to go in and identify that. And it's all based on, do both sides of the entry make sense? So what I have here is I have the sales order detail, and I've added a field over here. I've appended a field, and I'll go ahead and show you what that is. And I've called it account category. And essentially what I did is I went in and said, if the account number starts with a 5, then just give it a 5. So just give it the leftmost digit of the account number. If not, I need to get the first 2 digits. And the reason being is in this specific GL, all of my cost of goods sold accounts start with a 5. I know that, so I can use that. To identify my inventory accounts, I actually need the first 2 digits being 14. So that's why I've created this account category. And what I'm going to use now is actually the pivot table feature within IDEA, and I'm going to hit pivot table. It's going to give me a result, which initially may not get exactly what we're looking for, but it's a start. And I'm going to go ahead and put the category as the columns, and I'm going to pull my journal entry ID over here as a row. And it's going to go ahead and create this hierarchy. It'll take it just a second. And I'm going to go ahead and put an amount column in here as well so we can see how many dollars are actually hitting our various account categories here. And what we've got now is a very clean pivot table that has this journal entries down the left-hand side. It has our account categories across the top, and it has our amounts within the middle. So we can see here where the 14 accounts, which are our inventory accounts, are being hit. And we can come over here and we can see whether or not we have some revenue accounts. We have some cost of goods sold accounts as well. Well, what I'm going to do from here is actually use this send to button, and I'm not going to send it to Excel. I'm going to change that to send to IDEA database. Change that in the drop down, and then I'm simply going to click send to IDEA. And now I have a new table called pivot table, and I'm going to add a criteria here that says if my inventory account isn't 0, so I have activity hitting inventory, I want to see all transactions where that's the case, but my cost of goods sold account is not impacted. So where does inventory get impacted? Cost of goods sold does not. And I'm going to go ahead and just accept and validate. And we can see there that we've run it across all the sales orders. In this case, we don't have any instances where inventory was hit and cost of goods sold was not. So that's what we're looking for there as far as missing expenses. We have a certain transaction where we expect an expense account to always be utilized. So here we can pull an exception basis if we had any, and we could say, let's go investigate why those do not have any type of expense or cost of goods sold being used. In this case, no exceptions. We feel pretty good about our procedure because we had 100% analysis, and we can move on to our next step. The next one I want to talk about from a risk standpoint is spreading or splitting of expenses. The reason that this is commonly used, it's typically used to hide a fictitious invoice, and really it's all about hiding. And the way that it's done is it's just taking that expense amount and just spreading it across all of the various accounts, because generally speaking, it's harder to detect a small fraud compared to a large fraud. So if you had $5 million in one account, that's probably going to hit a budget line item. Somebody's going to notice that discrepancy. So what we're looking for here is whether or not it's maybe being spread across. So some of the ways that we can do that is a horizontal vertical analysis is probably the most classic way. We're not going to touch on that one too much, but I do think it's something to look at. You can also look for entries that hit multiple accounts where that doesn't make sense. And we can look at items just under thresholds, key thresholds using Benford's law. So let's go ahead and talk about that here real quick. In this case, I'm going to use my GL data file, and what I have is I've set a criteria to where all of my expense accounts are showing here. I'm only going to worry about my expense accounts in this regard. And what I'm going to do first is I'm going to go ahead and I'm going to summarize this file based on the voucher number and also my GL account number. And what I'm looking for here is, do I have any vouchers where the expense is hitting multiple different accounts? I don't necessarily need to subtotal anything because I'm looking for frequency, and I'm going to go ahead and hit OK. So now I have all of my voucher numbers down the left, followed by my GL account numbers. And if I want to identify those vouchers that are spread across multiple accounts, I'm simply going to do one more summarization. I'm going to summarize on my voucher number and click OK. From there, I can set the criteria to say that my number of records is greater than 1, and I now have a list, and you can see in the bottom right-hand corner, I have 47 vouchers that hit multiple accounts. If we wanted to see if we have a high risk, we could simply sort that in descending order. The most number of accounts that are hit on a single voucher is 2. For me, I'm not going to consider that too high a risk, so I'm going to say that we feel pretty good about that and move on. If we saw 10 or 20 different expense accounts being hit, that would really mean that we need to go back in and start to review those details and figure out what's going on in that specific voucher and whether or not that makes sense. The other thing that we can do is use Benford's Law, and I'm a big fan of Benford's Law. If you're looking to learn more about it, because we're only going to hit it briefly here, there are a couple great books. There's great information in the help menu within IDEA, but you can also look for the Forensic Analytics book by Mark Negrini, or he even has one on Benford's Law specifically. But what I'm going to do here is I'm just going to use the built-in standard feature in IDEA for Benford's Law. Right here I have a computers and supplies account. I'm just going to hit Benford's Law. I'm going to leave all of my defaults set. You can see that it's going to run a bunch of tests for me. It's going to create databases for me. It's going to create suspicious databases. Again, you'll want to go in and look at all of those details. I'm not going to get into that just now. But what I'd like to focus your attention to are a couple things, and it's a couple sides of Benford's Law that a lot of people don't necessarily look at. Traditionally, traditionally the first digit is examined. I would encourage you to go across to actually the fourth tab within this result, which is the second digit test. Now, whether or not it's scientifically proven, when it comes to financial data, I've been using Benford's Law for quite a few years now, and it seems like the zeros and the fives in the second digit are almost always out of conformity. I can't think of a single data set that's financial in nature that was in conformity on the zeros and fives as a second digit. So we would expect those to be high, and since Benford's Law is based on proportions, everything else to be low. What jumps out at me on this one is the fact that the second digit of a 2 is a little bit high. So that is a little bit unusual, something we'd want to look into. The other thing that I would encourage you to look at are the first 2 digits. And this is where you can start to see threshold issues. If you notice, we have a pretty big bump here around 24, 23, 22, 21, and 20. Well, right off the bat, that makes me wonder whether or not this organization has an expense threshold, whether it's turning in receipts on T&E, whether it's signatures on a check or approvals of an invoice that requires additional individuals and additional signatures. You'll see we also have this little bit of a bump here at 50 and below, and then it goes pretty small. Anytime you see a spike right before a threshold, or even a bump of multiple digits right before a key threshold, that can be an indication that somebody is spreading or splitting expenses to get around that threshold, which can impact, it's really a circumvention of controls. Maybe it's fraud, maybe it's not, but it does indicate that it's somewhere that you want to look into just a little bit further. As I mentioned, this is just simply a result with an idea. If you come over here, you can see that you also have all of the various tables for you to look at, and you can do your follow-up and research at that point. So that's another way that we can use Benford's Law as it relates to spreading and splitting of expenses. The other item that I'd encourage you to look at in the expense side is looking for vendors in unexpected accounts or accounts with unexpected vendors. It kind of goes both ways, and really what this is for is looking for somebody that's trying to hide transactions in a bigger bucket of expenses. And as I mentioned, if you have Foreign Corrupt Practices Act or UK Bribery Act compliance issues, this can be very important, as you do have your compliance sensitive accounts. So what we'd want to be looking for here is, does it make sense that a vendor has activity in a certain account? And for that matter, does it make sense that a certain account has activity from a vendor? So we can look at it from two ways, from the GL account side and then from the vendor side. One of the easiest ways to do this is my second bullet point on detection, and that's categorizing your vendors by type and having some kind of a system so you know what vendors are expected. So if we go into IDEA and look at this, what we can do is I'm going to go back in, close out a couple of these here for us, and go back into my GL account. And again, I've got my expense accounts showing here, and I'm going to use a pivot table. Yet again, I really like the pivot tables when it comes to looking for things that are where they should be. And I'm going to have my GL account description on one side, and then I'm simply going to put my payee name on the other. And then we'll put in the amount so we can see. Again, I'm going to go ahead and send this out to an IDEA database. And as we look at it here, we have a couple different things we can do. We can see that the Aqua group, for instance, has activity in virtually every expense bucket that we have, everything from postage all the way to mileage and line of credit, lawn expense, and insurance. Now, that would cause me a lot of concern if this were an organization that I was working with. that would be somewhere that we would definitely want to start investigating a little bit further. We can go across and we can see others as well. We have a CPA here. Does it make sense that the CPA has transactions and amounts in these given categories? The other way that we can do that is actually switching those columns. So what I'm going to do is I'm going to go ahead and put my payee name on the top. I'm sorry, I already had that there. I'm going to put it over on the row side. And I'm going to put my GL account description on the top. And again, if I send that over to an IDEA database, I can now quickly see who has activity in advertising. I have just about everybody. Who has activity in legal? Let's see, Kelly Evans Esquire, Richard Clark CPA, and then Shepler's Westernwear. Instantly, that's one that I'm investigating to say, why on earth do we have Westernwear coded to legal expense? So a couple different ways that we can use the pivot tables here to identify whether or not we have vendors in the right account or whether we have accounts with unusual vendors. Again, it goes both directions there. Finally, I want to talk timing discrepancies. Again, this is all about manipulation of financials and whether or not we're shifting things from one period to another. I'm not going to go over a ton of this in great detail because it is a lot like accruals, which we talked about earlier. The one thing that you want to do here again, though, is looking for those quick reversals right after a key date. Expenses were, removed from the financial statements right before the period end, and then they're added right back in after the fact. The other thing that we want to look at, as I mentioned, is looking into our the activity and how it relates to the year and the month of the detail. So what I've got added is I have this year mo field that I've appended to my database, and you can see it's a string of the year, a dash, and then a string of the month. What that allows me to do is again, as you're probably not too surprised on this, going to use a pivot table, and I'm going to go ahead and I'm going to pull my year and my month down the left-hand side, and I'm going to go ahead and pull my account across the top, drop some amounts in here, and then go ahead and send that out to an IDEA database. Advertising, I have activity in every single month, looks great. To me, all of a sudden, if I had cleaning in most months, but there are some where I don't, that's something that raises questions for me. Why do we have, zeros right here at the end if that looks like it should be a fairly standard account or a standard expense? Christmas gifts and bonuses, that's one where we should have some set expectations on timing. We want to evaluate that as it makes sense with those expectations as well. So timing, again, it's very important not only in accruals, but it's also important in expenses. I think as it relates to expenses, the pivot table feature within IDEA and extracting that out to an IDEA database is one of the best things that you can use to try to figure out, does it make sense? Are things where they should be? And then, as I mentioned, the Benford's law analysis, not necessarily across the entire GL, but within certain expense accounts, is actually a great use of that, feature within IDEA. So a couple quick closing comments when it comes to figuring out where your expenses are. The first thing you want to do is set your expectations. Do you have key thresholds where you would expect, there are maybe signature thresholds, receipts are required, invoices have to be approved by the board. Look for those key thresholds. Look for transactions where you have a set expectation that there should always be an expense account. Look for anything that's missing there, and I think that's really going to help you. Again, a couple great books for this as it relates to Benford's law and the use of that for financial statement fraud would be Forensic Analytics is my first recommendation. Then the Benford's Law book by Mark Negrini also has some great information. Gets into a little bit more of the detail and history of Benford's Law, but it does help quite a bit. With that, I'm going to go ahead and open it up to any questions that anybody has. Feel free to go ahead and type those in the questions box on the right-hand side of your screen, and we'll go ahead and answer those. While those are coming in, I will say that we do have 2 upcoming webinars in this series, one on revenue-based analytics. That'll be September 2nd at 2 o'clock Central Time. And then we'll be taking a look at the financial statements from a bird's eye view on September 16th at 2 p.m. Central Time as well. I invite you to join us for both of those. As the questions are coming in quickly here, if you want to reach out to me with questions that you don't want to ask right here, please go ahead and send me an email. My email's on the screen. It'll be in the slide deck. You can follow me on Twitter for resources and ideas at J313, and then I'm also on LinkedIn. I have a couple quick questions here that have come in. When you use a pivot table, how do you quickly get the detailed transactions in a cell. So if we're back in the pivot table here, I'll actually go into the pivot table. One of the things that you can do is I like to go actually to the pivot table, isolate what I'm looking for, and then I'll use the visual connector to come back and acquire that detail. So if I isolated that I was curious for accounting and legal and then aqua group, I would use a visual connector back to my original detail to go ahead and pull that. As far as extracting it from within, I don't believe that it has that functionality where you can just, like many of the results do, where you can click on the blue hyperlink. I don't believe that's in there. The best thing is essentially to extract that out and then get that detail. Other questions that have come in. The author's name on both of the books that I mentioned, both Forensic Analytics and Benford's Law, that is Mark Negrini, and that's N as in Nancy, I-G-R-I-N-I, Negrini. I believe they're available on Amazon. They are published by Wiley, and I think you'll find those out there. Forensic Analytics, the reason I recommend it first is it does have a how-to in both Excel and Access, and I'm convinced if you're proficient in IDEA, you can take that and build it yourself to go ahead and get that information and go ahead and use that within IDEA. And Lindsay, correct me if I'm wrong, but I believe Mark has actually worked with you all on developing the Benford's Law tools within the software.
Yes, that is correct. Mark did help with that, and I will also send links to his books when I send the follow-up email as well, so that they're a little bit easier to find. But they are really great books, and we've worked very closely with Mark on the Benford's Law analysis.
All right, thank you, Lindsay. As far as the pivot tables, I don't believe you can freeze panes within this feature here. I think you would have to get that out and treat it like a normal IDEA table is going to be your best bet there. With that, I know we're very right at the end of the time. Again, if you want to reach out to me, my contact information is on the screen. Lindsay, I'll let you handle. We have one question
Yeah.
about the next two webinars. I'll let you handle that one, and I'll just say thank you to everybody for joining. I look forward to talking to you again in a couple weeks.
Yes, thank you so much, Jeremy. And thank you everyone for joining us and for your questions today. Jeremy mentioned that we have 2 more webinars or webcasts in this series, and they are full. If you would like to receive the recordings of those, you can email me at marketing@automation.com, the email address you would have received your invitations from. And we can add you to the list to receive the recordings so that you will still get the information. You just might not be able to get it live. And if there are any openings, we can also put you on a wait list. So again, if you have any questions, Jeremy's information is on the screen. I'll be contacting you within the week with the recording, the slides, and information about the books that Jeremy mentioned. So enjoy the rest of your afternoon. Thank you so much for joining us. All right, thanks.
Thank you.